Hello and welcome to the Alt Asset Allocation Podcast. Today's interview is with Damion Lupo. Most of our listeners know what a 401k and an IRA are. If you're interested in alternative investments, you've likely been frustrated that they're hard to own in a retirement account like a 401k or an IRA. Maybe this has led you to look down the path of self-directed IRAs. Congress has proposed changes to laws governing IRAs as part of their $3.5 trillion reconciliation package. In its current form, which likely will pass, their proposal would prohibit IRAs from investing in most alternative assets. All accounts owning these assets would need to liquidate by the end of 2023. Massive changes. These changes, if enacted into law, and again, it's looking like this will be the way, this would have a direct negative impact on your ability to self-direct your IRA. I normally try not to be too topical and stick to longer term themes with this podcast. This is still there. This is part of the bigger macro theme of getting more taxes in the government's coffers. Eliminating your choices with self-directed IRAs, this is no different. Damion goes into what's changing and some potential moves you can make to keep investing in alternative investments in these retirement accounts. A reminder that nothing in this podcast is financial advice and is meant to get you started scratching your head about some other options and not to be the sole source of truth with your decision-making progress. Do your own research. Before you listen, please don't forget to like or subscribe to the podcast, or even better, leave a review. If you're watching this on YouTube, please like the video and or subscribe to the channel. This stuff really, really helps. Okay, Damion Lupo on retirement accounts. Enjoy. Damion, welcome to the show. Excited to have you on today.
Yeah, Ben, it's good to be here, man. Good to see you.
Likewise. Hopefully everything down in Birmingham dries out. We're just saying there's a once in 200-year storm that just happened. So you've got rivers all over the place, riding your rowboat to the grocery and things like that.
Everybody's growing gills out here. We had one of the guys got a picture of his truck, and it was literally like 5 feet sideways in off of his driveway. So it's just kind of interesting when you wake up and you realize sometimes how little power you have, and you have to assess what you have control of. I think that this was a good reminder of that. There's a lot of things that we complain about that we can't control, and then there are things that we can control, and it requires us taking action. Like you can't stop the rain, but you can prepare for the rain. And that probably has a little bit to do with what's coming just in the economy and finance and investing, being really prepared for it so that you're not freaking out when the rain comes. That's a bad time to start planning.
Yeah, it's very true. It's a very stoic way of thinking about things, right? Like all of these externalities you can't really control, but you can control your preparation and your reaction to them. So definitely agree with those. So excited to talk about a number of very interesting things for my audience. But before we get started, wanted to hear a little bit more about you and your background, where you're coming from.
So it's sort of a crazy, like somebody asked me, where are you from? And I said, I'm from everywhere. It's like a military background. I grew up in Alaska, but I've lived all over the place with projects and businesses, started more than 50 companies and done a lot of, I've been out there in the real world. It's not an academic experience where I'm teaching from a book. I'm teaching from scar tissue and baldness. And my background is basically just going out there and doing and trying. And so I did the opposite of what they teach in school. I said, okay, well, I'm going to go do this. And then I learned that I'm going to be wrong most of the time. And instead of saying, well, I need to be right 70 or 80% of the time to pass through this thing, I just went out there and I stopped caring whether I was going to be wrong because I knew I was going to be wrong. And in business and investing, that's been a really beneficial thing. The only problem is if you don't have any sense of anything because you're too young and too dumb or just too arrogant. Like my story, when I started out, I spent about 5-6 years building up, going from zero to a $20 million portfolio. And I thought, I am Superman, man. I am 10 feet tall, bulletproof, and everything is good. And then 2008 showed me that I was mortal. Went from 20 million to -5 in 12 months. And that it gives you a lot of perspective when everything is taken away and you go, wait a second. And then one of the funniest parts was saying, okay, well, this is my dumb partner's fault. This was Obama's fault. It was Bush's fault. It was the Federal Reserve, everybody else's fault. And then the biggest shift there was shifting to a place of responsibility and saying, no, this is 100% my fault. And here's how I can shift me and do much better next time. And so that was, I mean, the story goes really from victim to victor through responsibility. And I think that that's the big takeaway from that whole thing. It took $25 million passing through my fingers to understand that responsibility is how you win.
Yeah. Well, I mean, hopefully some of the listeners can learn a little bit from these. And I know that's part of your mission, is spreading that knowledge so other people don't have to experience the loss of a significant sum of money like that. I'm curious. I mean, this learn by doing, not being afraid to fail, like swinging big. What do you have you thought deeply about, like, why you ended up like this? Something in childhood that influenced you, parents' influence? What is it, do you suppose, that made you think like this?
I think part of it was, and so it's interesting growing up because I have siblings and none of us are the same. Like I'm very much the outlier. And so we all had the same type of growing up where we were told, no, don't do it. Be safe, stay inside, don't go out. I mean, in Alaska, you go outside, you can be eaten. Like I remember walking home and there were bears that were out there. My dad was out there with his shotgun and I didn't know. I just walked through. So I could be eaten on the way home. Literally not a thing most people have to worry about, being eaten by something, but I did. And so part of this, the being told no, and our system tells us no a lot. Don't do this, don't do this. And it's generally trying to contain us, to keep us organized for a system. And I pushed out of that. A lot of people stay caged in, they get broken. It's like when you break a horse, you break the horse and part of the spirit dies. And I think a lot of people, unfortunately, have their spirit broken and then they just become a cog. And for whatever reason, I got so mad at being told no that it pushed me, it made me lurch and go out with this ferocious need to win. And part of winning was proving that they were wrong, like the system, my parents. And so it's interesting because I don't know if it's better to tell a child that yes, you can do anything, or to tell them no, you're terrible, and then you make them push through it. For me, I pushed through it, and it was really proving. After dropping out of college, it was proving something, because I felt like people were judging me. Oh, why aren't you going? Why aren't you staying in college? You're basically a loser. You don't have a job, and so part of this was this significance. It's one of those basic human needs that Tony Robbins talked about. That's where I heard about it first, years ago. And it was the need for significance. Like I need to show people that I'm significant. And then now it's about the contribution. And so I've shifted from the ego of significance to the giving of contribution. And there's a deeper fulfillment with the contribution than there is significance. Significance is never enough. It's like you get one Ferrari, you need 5 to showcase that you have a newer one, a faster one, a greener one, or brighter one. Same thing with everything else in your life. So there is a shift, and part of it takes everything being lost. And I don't know that I would necessarily say that people should lose everything, but we shouldn't be afraid of losing, because when we think of everything, we tend to get wound up in the stuff instead of understanding that when we still have relationships, assuming you haven't blown those up, which I'm familiar with doing that too, the relationships and your health and the stuff that people go, that's very, very easy to talk about, but I need to figure out how to feed myself. And I'm like, yeah, in America, we get way too wound up in the stuff and the money. And we go, why is it not fulfilling? I've got all this success. And the problem is they're very different. And we tend to spend so much time on success that we miss the whole point of life, which is the fulfillment of being alive.
Yeah, 100%. I mean, the hedonistic treadmill of more, bigger, faster, and then it kind of reverting to the new norm. It's interesting. I mean, I've spent the majority of the last decade outside the US by more entrepreneurial minded people, and it's funny to come back. I'm in LA, the narcissistic capital of the world, but like the amount of people just sleepwalking through life and just accepting their role as a cog in the wheel and not thinking that there's another path or another way of like living this blank canvas that is life, and going towards something a little bit more fulfilling. So that really resonates a lot. So so what you're doing now, I mean, how are you kind of helping people kind of open up their eyes to these other possibilities, or where do you point them? Like, what's your process for kind of chaperoning people to this new possibility and opening up their eyes a bit?
Well, I mean, part of it starts with a little bit of a shake, like shaking people loose. And to your point, many times I'll call myself the hedonistic prick you wouldn't have wanted to have met 15 years ago. I wouldn't want to have met me 15 years ago. It took this whole process of reinventing, which I wrote a book called Reinvented Life, which was basically a manual to me not to do the same dumb crap I did for 10 years. And so after that process of losing and starting over, there something popped out, and that was this mission to help people break their shackles. Because I look at money today as modern day slavery. When I've been outside of the US, the longest I went was about 7 weeks. And I remember coming back, and there's something interesting. I think after about a month, you start to break your like vacation mindset, and you start to it becomes normalized. And then you go back to the United States, you're like, oh my God, it's just consumer mania. And there's just this totally different focus on what's important. So on the other side of this meltdown, I spent some time traveling a bit, went to Fiji and things. And what I did is I studied and went deeply inside, and I found that there was a need for me to teach and help people break out of their bondage. And I watched my parents, both of them, play by the rules in the school system, in the military, and retire broke. And then basically my dad died running out of money. And so I just watched this whole process, and I said, there's got to be something that is better, that's truer. Like, this seems dishonest. And so what I found is that most people are playing by the rules. They're building up this idea of a retirement, playing by the Wall Street rules, and they're getting screwed, and they just don't even realize what's happening, because the system just feeds on us. It's like the Matrix or Facebook, whatever you want to look at it. We are the product, and Wall Street is the eater. They eat on us. So I started looking at everything that's out there. What are people doing? How are they prepping? How are they building a foundation? Is it quicksand, or is it sand, or is it rock? Or what is it? And what I found is most people are building assets based on paper, smoke, and mirrors. And that's Wall Street. That's mutual funds. What I realized that there's no real financial freedom. And I'll give you an example. I had some people come to me about 7 years ago, and they said, we heard that you're great with money. And I said, I don't really know what that means. They said, we want you to help us. And I said, okay, what do you want me to do? And they said, we don't know what to do. We have $2 million. We're 50, 52, 53 years old. We have no idea. We just don't want to lose it. And they knew they didn't have time to spend another 30 years building it up. They really kind of accidentally ended up with it, which is what most people have with 401ks. They just accidentally have $1 million or $2 million because they were contributing, but they never had to learn, and they never built a muscle. They just looked at the gym. They never went inside. So I realized that people need, like, when we talk about alternative assets, you have to start understanding some stuff. Like, you can't just buy real estate. Generally, you've got to figure a little bit out. Like, you've got to understand what you're buying. If you're going to buy gold and silver, you got to understand a little bit. If you're going to buy crypto, which everybody should be buying crypto. And I very rarely say you should do anything, but our entire financial system is changing. The entire monetary system is going to be changing this decade. Guaranteed, that's where we're going. It's exponentially shifting. And so you have to start engaging. Otherwise, you're always going to be afraid. I don't care if you have $1 million or 2 or 5 or 10, you're always going to be afraid of losing it, just like my parents were and these people were. So the shift that I made was to give people power and control over their retirement money. It was to say there is an alternative where you can actually control. You can take your 401ks, your IRAs, you can take that money without paying taxes, without paying penalties. You can start investing in real estate, in gold, in Bitcoin, in private placements. And there's a better way than just what you're told is the only way. And that's really been the shift the last decade, is giving people control and true possibility, so that their life is not by default. It's actually by design. That's what we do.
So the default way is go get a job at a big corporation, have a 401k, have the matching, do my traditional or Roth IRA, put $6,000 in a month on the side, and then which is invested like through a brokerage. So I have access to publicly traded equities, and do this until you're 60 years old, and then look how much you have inside, and hope to God it lasts you until you pass away. Is that pretty accurate?
Yeah, literally, people have hope as their strategy. That's exactly what people have been doing.
Hope is definitely not a strategy. Well, it is for a lot of people, but it should not be a strategy, I guess, or it's not a viable strategy, I suppose. Okay, so the idea of self-directed IRAs, I think I've talked about this on my podcast before, but just for my listeners to go over what that is, give me an overview of what a self-directed IRA is, what it can hold and what it cannot hold currently based on the current laws, and we'll get into the potential changes.
So basically, just so we're really clear, that there's two main things. There's qualified plans like 401ks and 457s and things, and then there are IRAs. These are the two main things that people use. They're tax shelters. Our tax code is built for people to incentivize people. And so most people start with a 401k or a company plan or a thrift savings plan with the federal government or something. And then when they leave, they'll move that money typically into an IRA. Sometimes it's a self-directed IRA, but they'll put it into an IRA. You can also set up an IRA and you can just put your $6,000 a year into it, or seven if you're over 50. So basically, we have one of these two things. And people have been using the self-directed IRA basically because they were told by the marketing machine of IRA custodians that, hey, this is how you can invest in alternative assets. You can control, you can buy your own stocks, you can choose, you could even do some real estate or some crypto. And so people have been going down that path, and that was the best information they had because it was either that or they just went back to Wall Street and had mutual funds with their old 401k. That is not the best information anymore. It's what people have done. And I did it. I mean, 15 years ago, that's what I had, a self-directed IRA, because I didn't know any better. And I didn't know any better because I was following mainstream information and the narratives out of big institutions that want to keep your money in their system so they can charge you fees. So if you follow the money, you can learn a lot about finance and pharma and medicine and everything else. Just look where the money's flowing and you realize, oh, that's what's going on. That's the agenda. So that's what people have been doing over the years is defaulting into a self-directed IRA where you can start choosing some of the stuff, at least kind of choosing with a custodian babysitting you.
Right. Well, I mean, I think over the last, I don't know, couple years or whatever, Peter Thiel has been getting a lot of heat because he had $2,000 in his Roth IRA, which is post-tax income, grows tax-free until you're 59 and a half. He had a value of $2,000 of it in his Roth IRA in 1999, and now he has over $5 billion in this IRA that he will pull out when he's 60 years old and not pay any taxes on it because it was post-tax income on that $2,000 long ago. So there has been this reconciliation package that's going through that's talking about kind of going after these self-directed alternative retirement accounts. What can you talk briefly on what's going on and where this might be going?
Yeah, I can tell you exactly where it's going. There's an attack on wealth. We don't have Democrats and Republicans. We have haves and have-nots, and we have people that are trying to pretend that they're protecting the have-nots, and what they're doing is they're actually ending up protecting the wealthy. So in Peter Thiel's case, it's really interesting because he's got this Roth IRA with $5 billion, part of this reconciliation bill, which gives Congress the ability to pass all their budgetary stuff on a straight majority vote, which you need to do with the U.S. Senate being 50-50. They can't do anything that requires 60 votes with a filibuster. So they use this process to be able to pass major initiatives like the Trump tax cuts and different things they were passed using reconciliation. What they're saying, some part of their rules that they're proposing that we believe will be passed that came out of House Ways and Means. One of them was if you have over $20 million in a IRA, you've got to take, or any type of defined contribution like a 401k. If you've got 20 million and you make over $400,000, that's that Biden thing. If you make less than 400, you're not being touched. If you make over 400,000 and you have over 20 million, you've got to distribute or disperse everything over 20 million the following year. So theoretically, this would mean that Peter Thiel would have to take $4.98 billion out of his retirement account before age 59 and a half, pay 10% penalties and gains. Like, it would be a mess. And I laughed because the way this is written, Ben, it literally won't even impact him because all he's going to do is say, okay, I'm not going to make $400,000 in adjusted gross income. So Congress does these crazy things, and people like Peter have incredibly smart advisors. He's already pretty damn smart, but wealthy people have advisors. And they're like, okay, well, how do we need to shift? Like, I was working with Tom Wheelwright at an event a couple of weeks ago, and he said, this is going to pass. And he almost kind of like was laughing about it, going, this is going to pass and it's not going to impact anybody they're trying to impact, but it is going to impact people that went out and did self-directed IRA investing, and they invested in real estate and syndications, and all those checkbook IRAs that have LLCs, all of those are being banned. Not only are they being banned, but if you keep it and you have an investment, it will disqualify your entire IRA. So that's the terrible news, because people are saying, well, shoot, what do I do? I've got a deal that's locked up for 3 or 4 years. What am I supposed to do? So there's ways that we can move out of that. I mean, that's what we do with the EQRPs. But for a lot of people, they don't even realize this is happening. They're just sitting there going, oh, okay, it's Congress. They're yelling at each other. But the reality is this is the biggest overhaul with the retirement system in probably 2 generations since it's even started.
These single member LLCs are the way that people own Bitcoin or own real estate. There's like a far reaching. So I mean, I guess before we jump into some of the other options, what can my listeners do now to try to block this? Is there call your senator or anything, or does this even matter?
At this point, it doesn't make any difference. It's such a small. So the way that Congress looks at things, they're looking for honeypots. Where are they going to get easy money? And the National Association of Plan Advisors, NAPA, has fully endorsed this bill. They said this is good for everybody, and because they're basically run by Wall Street, they're saying this is a great thing. It doesn't really matter if Joe and Susie America call their senators and say we don't like this, because this is a massive amount of money for infrastructure, and they're not going to try to protect Peter Thiel. Even Peter Thiel isn't even going to be hit, but they're not going to change the bill and lose tens of billions of dollars in revenue so that somebody can make more money in their IRA. They figure that 10 or 20 million dollars is plenty, and they also don't. Here's one of the problems. One of the reasons that they're pulling this away, it's to push money to Wall Street, and there's been a lot of scams. So people are investing their money. They have these checkbook IRAs, and they're getting sucked in and losing. I've seen a lot of people that have been pulled into scams. So I think that's the
It's
one
in the
thing.
name of protecting investors, right? Investor
Totally.
protection. Thank God.
Yeah, I mean, great. That's like the SEC and Gensler saying, "Oh, we need to protect everybody." I'm like, you know what? How about people take responsibility? That'd be awesome, but they don't think that way. They think everybody is basically incompetent little children.
Yeah,
So
don't even get me started on the accreditation rule.
right. So yeah, that blows. I mean, so they're they thought this was a good idea. What can you do? You can prepare for this to become law. Even if it didn't become law because by some weird reason they pulled it out, it's in the crosshairs. It's going to be changed. And so what do? Do you wait and just try to hope you get out before it? No, you shift. That's there's a transfer that you can do between an IRA and a qualified plan like the EQRP. You can move your assets. And so that rollover is a non-taxed, non-penalized event that takes all of this problem away. And people don't even realize it. They're like, oh, I need to change the law. You don't need to change the law. Just change your asset.
And can you walk me through and all the disclaimers, hashtag not time to financial advice, not tax advice, like talk to your own advisor for each or legal. But high level, what somebody, so if, for the standard American person who has money in their 401k or IRA, this doesn't impact them. They're held in publicly traded markets. But if you have a self-directed IRA, or like what are my next moves to help protect this, or what should I be thinking about right now?
So right now it's really important and timely to get educated on this and so this is you taking initiative. It's not waiting to see what happens. It's starting the ball rolling. If you've got a self-directed IRA and you're investing in anything other than stocks, this applies to you. And what needs to happen is you just ultimately need to convert. It's a rollover of an IRA into a qualified plan. So IRAs are built under one part of the tax code called 408, and basically the other stuff is under 401. And so if you move from the 408 to the 401, it's moving from an IRA to a qualified plan. Specifically, what we do is we build an EQRP. It's an enhanced qualified plan, and somebody can move assets. And so again, like you just said, get your advisors involved. And if you are your advisor with you and Google, you need to hire somebody, because this is not something you want to have Google being your Yoda. Like that's a terrible idea, because that's a dumb Yoda. That's like, it'll tell you whatever you want to hear. It's like a yes man. You don't want that. You want people that'll tell you the truth. So logistically, what happens is we set up a plan, and then we move the asset from the IRA, whether it's Bitcoin, whether it's gold, whether it's a private placement in real estate, that asset gets moved from the IRA into the qualified plan. If you have an LLC, you can move the LLC into the plan. That LLC is going to be blown up by this tax code change. So it's a rollover. There's no taxable event when you do any of this stuff. And it's a question of timing, because there's going to be some time to do things. But the problem is a lot of times people say, well, there's no urgency because nothing's going to happen this week. And then all of a sudden when they need it, when they realize I'm out of time, they don't have enough time to get it done. So right now is the time to start converting things. There are some things that end in 2 months, and there are some things at the end of this year, like the mega backdoor Roth is being shut down in 10 weeks. And then there are certain things where you have a grace period of a couple of years. So it's important. Like what we do is we spend our time educating people. We spend our time strategizing and talking about options. That's what people need to be doing, figuring out the options and then thinking through and making decisions and taking action now, not waiting until they get a notice from the IRS.
Yeah, no, the Titanic floated until it didn't, right? And it's
Yeah.
gradually and then suddenly. So I'm thinking like, I mean, I had an old 401k from an employer that I rolled over. So I essentially switched from 401 to 408 when I did that. So this
Yep.
is just rolling it back from 408, which is the IRA equivalent, into 401,
Huh?
and then it's shielded. It's still there's no tax impact. It's just a paper movement, I guess. But I mean, would you be dissolving the LLC and then those assets would be transferred over to this new qualifying account, or how would that work?
So here, there's two options. Basically, you've got an IRA that has assets that a custodian's investing. We can move those assets directly from the IRA into the EQRP. If you have a checkbook LLC IRA, where your IRA bought an LLC and then your LLC is the investor, we simply move the LLC over. So your assets are still going to be in the LLC. It's actually a fairly straightforward move. We just move the whole LLC over, and this works whether you're by yourself or whether you have a dozen or 50 employees. That's the unique thing. The EQRP is set up to be dynamic. So a lot of people get stuck and they're like, well, I've got a couple of employees or something. This actually works. And it's the only one of its kind in America that works like that. So really important. It's not necessarily brain damage unless I'll tell you what's brain damage, Ben, when you get a tax bill for $100,000 you weren't expecting. And I've seen that happen over and over because people are like, well, my advisor. And I'm like, your advisor doesn't know this because they don't specialize in this. You need a team of people that specialize and generalize. You need people that see everything and people that see this one narrow thing really deeply. And unfortunately, most people have one or the other or none. All they have is Google, which I just constantly go, Google is not your friend. It'll tell you what you want to hear. And if you don't know the right question to ask, how are you going to get any information out of Google?
Yeah, well, and hopefully people are doing their own due diligence and things like this will open their eyes to it, that's for sure. But it's certainly not enough to make a decision. And it's just kind of to get the ball rolling and start thinking, hey, maybe this is something I should take initiative for and dig into a little bit more deeply. So you roll this thing over into a qualified plan, EQRP, your company will do this. What are the ongoing costs or concerns or potential landmines that people should be familiar with or think about when doing something like this?
So ongoing costs are flat. It's very different than most things. You don't get nickel and dimed and you don't pay a percentage of assets. It's $500 a year. And that's fixed indefinitely. So that covers everything. It covers all your filings, covers your Fed filings, your state filings, your LLC filings. It covers all your compliance, which we do. It covers all the support. So it's actually funny because when people realize everything that's going on, they go, that seems like a bargain. I'm like, I think it's a fair number. So that's what happens. Landmines, as long as you don't think you know everything, because I can tell you from personal experience, the day you think you know everything, you're about to get rolled on by a big boulder or something's going to smash you. So when you are smart enough to ask questions and reach out to your team, then you really don't have landmines. It's when people say, I'll just not tell anybody and I'll invest with my parents with my retirement account, which is just disqualified. Like when people just think that they won't get caught, that's usually where people get into trouble. They go off and do things without bringing in the team and saying, hey, here's what I'm doing. Am I good? And we do that every day. People call us and we say, here's how you make sure that it's good. So we keep people in compliance. Landmines, the only other dumb one is where people say, well, I can just use this money for anything. I'm going to go buy a Ferrari. I mean, I've done the Ferrari thing and I didn't do it with a retirement account, but if somebody's that dumb to go use their retirement account to buy a Ferrari, you're going to have an event. Usually it's ego that gets people into trouble. It's like Ryan Holiday's book, Ego is the Enemy. Like, hello, ego, it will get you into more trouble and it's valuable, but that's usually the landmine. It's people's own ego and it's their lack of humility in bringing on the correct people and people that will tell them the truth.
Yeah, 100%. And I think it's Mark Twain that gets credit for this, but I feel like I say Mark Twain quotes all the time, and I'm not sure it is, but it ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so. And it's so true. You get in so much more trouble for those things that you're pretty sure about, and get blindsided. That's for sure. So I wanted to talk on the mega backdoor Roth briefly. So this thing is ending, but what was it and how were people using it?
Yeah, there's actually been some wealth strategists that are out there that have built up some pretty significant practices where they're basically saying, "Give me $20,000 and I will give you this amazing strategy." Well, it was a goofy strategy. That here's what the strategy was: if you have a qualified plan, you're able to take and contribute up to $58,500 into it. Normally, you'd have to have about $180,000 in income. And the mega backdoor basically, you structure the plan the way that we build the plan. We structure it differently so that you're able to earn like $60,000, $70,000 in income and put pretty much all of it into a Roth account. And that was really interesting because you avoided about $15,000 to $20,000 in payroll taxes, and it allowed wealthy people to put a ton of money into a Roth when they might have been precluded or excluded from doing that if they made too much income, which is what happens with IRAs. So it's a strategy. Again, I love Congress, how they think it's like the Patriot Act. It literally is the opposite of patriotic because of all the government growth, but another story. It They think that they're going to hurt the rich. And I'm like, you're not hurting the rich. You're just hurting people that are trying to create wealth. So they're trying to box people in. And this was a tool that wealthy people used it, but also people that were trying to create wealth. People that had a million or two that are not wealthy. I mean, $1 million is not wealthy. It's just $1 million.
Certainly
So,
not today either.
no,
Right.
no, give me a break. It's like middle class.
Yeah, if that. I mean, depending where you are, shit. It's
Right. Yeah,
I,
but in LA, it's probably the working homeless. I mean, who
it's
knows?
just crazy. I mean, but I think zooming out, like, yeah, we're diving deep into these changes specifically with IRAs and retirement accounts, but this is part of a general overall theme of the have and the have-nots and the wealth gap, and the dollar's deflating and asset prices are inflating at beyond imaginable heights, and this is just furthering the wealth gap. So I mean, it, you said earlier that this was one of the honeypots and like kind of the low-hanging fruit to go after. Have you thought about other potential honeypots, where this could be going, what people will be looking at next? Because for me, it seems like a lot of these have been used as ways to grow your wealth over the past years, but like the wealth has been generated at this point, and the rest of the world's like starting to open up to these new things. And as soon as you squash those, the hyper super wealthy will just find another way that costs a couple $100,000 of legal fees and entity setups offshore for us to do. What are the next kind of honeypots where you see this going?
Well, one of the ones that's becoming fairly popular is the real estate professional, and people being able to limit their taxes if they have a spouse that goes and buys real estate. They can offset. I think that's probably going to be a target at some point as it gets bigger and bigger. I don't know what the number is, but it's one of those things where they're going to say, yeah, we don't know if this is a great thing. What happens is Congress ends up really protecting the big institutions, that like the insurance companies, and the reason 401ks are not being attacked in this bill for real estate investment is because there's hundreds of billions of dollars that comes from these plans that goes into commercial development, which is required if you want to have any type of real estate industry. So they're going to go after the things where they're going to find the Peter Thiels. And they're going to say, this is what we're going after. The problem is that our system is set up on fake money with a fiat system based on central banks printing, which is very inflationary. And if you look at every asset class, and I was watching and reading a thing from Raoul Paul at Real Vision, and he was talking about every asset class looks like it's moving up. Like there's a bubble in everything. So you look at real estate, you look at other than gold and silver, which is interesting. It's basically on sale, but
it's very interesting. Yes.
Yeah. But that's been suppressed. If you look at what happened to Chase Bank and JP Morgan, same thing, they got fined $1 billion in 2020 for manipulating the silver market for 10 years. In 2020, they made $1 billion on that trading desk. So they spent 1/10 of their profits per year on their fine for manipulating that. So that's what's happening in the metals markets. They're manipulated. So, okay, that's the one asset class that has not bubbled up. Everything else looks like it's going up. Real estate, the stock market, equities, all this stuff is going up. But if you actually compare it to the Fed's balance sheet, what you realize is everything is absolutely flat the last 12 years. So in terms of the balance sheet, you go everything except for one thing, and that's called Bitcoin. Why? Because it's technology and it's exponential. Everything else is linear. Real estate is not going to ever go exponential. It's matching the Fed balance sheet because that's the money that's pushing the asset price based on the volume of cash that's out there. So what you have to start asking yourself is, how am I going to survive a situation like this? Because you could have more real estate, you could have more stocks, but if all your stuff costs more, you're just net neutral. So there is a really important thing about thinking through, where are we going? We're going through an exponential change that's faster and more dynamic and decentralized than a central bank or a central government. They can't catch it. It's impossible. People say, well, can it be stopped? Can Bitcoin be regulated? I'm like, it's decentralized. You can try to tax it, but the problem is, unless you turn off the internet, and if they did that, I mean, it's Armageddon. So the reality is, we're breaking down these institutions called government and central banks. All of the institutions are going to be decentralized, whether it's insurance, whether it's accounting, whether it's lending, banking, all this stuff, even tokenization of assets, which are going to be other things you can go invest in. All this stuff is shifting. NFTs, people are like all excited about NFTs. That's just the beginning. Imagine when all the real estate is tokenized and everything's on the blockchain, and you don't have to go and spend money on a title policy. It's just, what we're doing is we're taking all of this fat. And one of the random things that I learned about the last couple of years is farming. It's where you're basically creating liquidity pools. And if you lose me, if you're listening, you're watching, you're like, what the hell?
Oh, we've done tons of talks on DeFi.
Okay, good.
Tons. Yeah.
Well, it's what my thinking and seeing this stuff is, this is, so like, I've been making 50-60% per year on my DeFi farming. And this has been happening for the last year. So I'm like, okay, I don't think it's not a 1 week thing. It's been happening all year. And I look at that and I say, how is that possible? This is what the banking system has been making off of us and been paying us 1 or 2% or 3% or whatever the number, this crappy number. That's why they have giant buildings everywhere. That's why they have bonuses into the hundreds of millions of dollars. Why? Because they're scooping up and sifting all of the cream. And so when you shift all of that profit and the potential, it goes to the people, and you start realizing, wow, that's actually just what the banking system has been taking for the last 100 years.
Oh yeah, no, it's I actually had somebody from the Maker team on, Mariano, a couple weeks ago, and like I tell people all the time, this was before Compound and Aave like were super user friendly, but it's like, go to Maker, put up some money in they were called CDPs back then, but put it in a vault, take out a loan, you're generating DAI, and you've just created money collateralized by another asset with a few clicks and a couple $100 in gas. And there's nobody running that. That's some lines of code that's all done automatically. If you don't pay it back, you don't have to pay it back. If the price goes down, you keep your loan all automatically. I mean, it's just mind blowing for these things, and that's for sure.
The biggest part about this that I like, makes me happy. I mean, it's why I'm so supportive of it. And it's why I really think that either you're supporting the current system, which is tyrannical, or you're supporting freedom. If you start shifting assets, if you have dollars, you're supporting tyranny, and that's pretty hardcore. And the reason I say that is because whatever your assets, your energy, your blood, your sweat, your tears are in, is supporting that system. And the more the people shift into a decentralized system, the more we have the possibility for peace and prosperity, where people are part of a global community. And when they're communicating and they have assets and they have the ability to transact, they don't go to war. And quite frankly, there's not the ability to wage war if you don't have the assets, or you don't have fake money, because there's no way to pay for it. So I think this is a possibility. This has the potential for us to shift into a place of peace globally, the more that people get on board with this. And that's one of the reasons I'm so in favor of people jumping in. And I say, you should be a part of this, because this is where peace comes from.
Yeah. Potentially. I think there's a pretty disastrous dystopian world as well, where everything's on a public blockchain, public, transparent, permanent. You can like automatically push there's a way that this technology can be used for evil that keeps me up at night. And I mean, that's where we're going, right? There'll be a CBDC that they can push negative interest rates directly in our wallet. You see the value actually going down day after day, and give you your stimulus check automatically. So it's coming, and it's terrifying, but big fan of decentralized alternatives, that's for sure.
Yep. No, you're right. There's always two sides, or if you listen to Robert Kiyosaki, there's three sides to every coin, and there are some nefarious players, and there's the technology it's it's like money. Money can be good or bad. It depends on what kind of fuel it's for. Is it for a missile or is it for a car? Like, like what's it doing? And people say, well, rich people are bad. I'm like, no, rich people just have more resources to do whatever they were naturally going to do. And so the same thing with technology. And I just trust it. I trust the code more. What I don't trust is like the central bank digital currencies where it's still centralized, because that technology can be used to hurt people and steal from them and manipulate them. Whereas if it's decentralized and it's code and it's transparent, I have a lot more trust in that and hope for the future based on that.
100%. Yeah. Dynamite can be used as a great tool for civil engineering, as also war. It's whoever decides to do whatever the heck they do with it. Well, Damion, I think this was super, super helpful. I'm loving all the EQRP people, waking people up to their 401ks and their retirement accounts and what's happening with them. What else do you want to leave my listeners with about this topic before we wrap things up?
I'd love to people to, I always say that the best thing you can do is invest in yourself. And the thing that you can do to invest in yourself is take action and create momentum, because then it's easier. It's like when people that are in sales know that the best time to make a sale is right after you made a sale, whether it's with the same person or just using the energy. And it's because there's momentum. And so along that line of thinking, taking momentum, getting some new information, I would encourage you guys to get a copy of the book. I mean, I'm happy to send it out. I mean, you can get it at qrpbook.com or eqrpbook.com and just get a copy of it. It'll give you a digital download of a summation. So you don't have to read the book, but get the summary and it'll go to your phone and then you can share it and read it, take you 10 minutes. But getting that, it gives you some new ideas. And then maybe one of those things plants a seed. Maybe you say, I need this right now. Doesn't really matter, but it's getting practice in taking action. That's the whole point. It doesn't take that much, but it takes something. It takes you choosing and then pushing some buttons. So that's what I would encourage you guys to do. Just go to qrpbook.com, get a copy of the book, and learn more. I mean, that's the best thing that I can suggest is taking control of your life.
Awesome. Damion, where can people find out more about you? Where do you want to send them?
You guys can find me on LinkedIn and visit me there. And happy to, I would like when people reach out and are genuinely connecting. What I hate is when people send me some canned thing that they've they send it to everybody, or their bot sends something to me. Those are the type of things that I like to unfriend, and I'm happy about it. Like, I just want to delete and block. But I absolutely love when people come out and they're like, hey, I want to learn something new. Here's what I'm doing. I mean, I'll spend time and invest in people. I'm not, it's not to try to create a client or a revenue stream. It's to make a dent in what I think is modern day slavery. And so every shackle I can help break is part of the fulfilled mission of my purpose on this planet. So please do reach out, contact me, hang out with me on LinkedIn and see what I can do for you.
Awesome. And I'll link it up in the show notes. Really appreciate having you on today, Damion. Thanks.
Thanks, man. I appreciate being here.
There you go. First off, thank you very much for listening all the way through. I hope you got a lot of value out of that conversation. As always, you can find show notes, links, and more at altassetallocation.com. Please share this with anyone you think might be interested and derive any value from this conversation. And as always, you can reach out to me for any feedback or questions. Please give the video a like, or even better, subscribe on YouTube or your podcast player of choice. This really helps others find the podcast or the video as well. Thanks a lot. Hope everybody has a fantastic day, and stay safe out there and invest wisely. Cheers.